Hey all, welcome to ShareTreck. This is Raj here. Friends, this is the macroeconomic video. We are not going to talk about a specific stock, but I'm trying to link some ideas from everywhere else and put them together to give an idea of what is happening with the stock market right now and why we may still not be out of danger. So I would like to first start off by looking at the DXY. Let's get to the TradingView platform. Well friends, here we are in the TradingView platform and I'm going to take you into the dollar index. I want to talk about the dollar index today because this huge drop that we have seen out here from 107 to 103 has got me thinking, what would be the reason why this huge area of support here was skipped and it could not hold us back, and we fell below the 200-day exponential moving average as well. And as I speak, I can draw for you a head and shoulder pattern, and this head and shoulder pattern, I'm not saying it will, but it has the potential of taking us down all the way to somewhere around 101.83. So there is still more room for the dollar index to fall. The dollar index measures the power of the dollar against a basket of foreign currencies, and a drop in the dollar index to me suggests that people are taking their money back and they are selling the dollars. Now, why would that happen? For that, we'll have to back up a little bit. Now, I would say that when people across the world make money, their favorite destination to go is to the US because we have the biggest capital markets out here. And why is US capital market so special? Because we have got institutions which provide transparency, institutions which provide justice, and institutions that are considered the global standard. And capital markets in US shine head and shoulder above everybody else because of those reasons. There's also another reason why money comes into the US dollar from across the world. That is because many other economies do not have as much opportunities as you can see in the US, and currencies of those economies are volatile. And therefore, in order to preserve any value that businessmen in those countries get, they prefer to keep the money in the US because the US dollar has always been strong, retains value, and they can be assured that their domestic currency is going to depreciate against the US dollar in the medium to long term. So people used to do that. And there is another very big reason why the US continues to attract all kinds of money from all over the world. It's because US is considered a safe place. It's considered as a refuge in times of crisis, even if the crisis happens to be within the United States. And one of the main reasons for this is because the US has been a global policeman. US has provided a peaceful environment for the global trade to prosper, helped in creating institutions like the World Trade Organization, and has been helping in stabilizing weaker regions of the world by providing aid and support, and also having its military bases in different places to make sure that there is an equilibrium, a strategic equilibrium, and we don't have wars and things like that. And because of all of those things, US has got a soft power, and the soft power has attracted a lots of dollars into the US market and also into US treasuries. And we are in a situation where this virtuous cycle means that many people are selling products to United States and reinvesting the money within the United States, buying treasuries, and the US government has been using this system, and it has benefited a lot over the years. That's why it has run a deficit of around 32 trillion. That's the debt that it has got, which it has to pay to the rest of the world. And the interest rate is pretty high right now. So I think the US government would like the yields to drop and the interest rates to go down so that the debt servicing is not as expensive as it would be, because the debts are really huge. At the same time, what has happened is that since Donald Trump has taken over for the second term, what he has done is he has accelerated his pace of disengaging United States from the rest of the world. He's asking countries what is the benefit of keeping US Army out there. He's using the US Army in a different way. Now the army in Germany, US Army in Germany is going to be moved across to Hungary, where we have Viktor Orban. And also Trump is kind of aligning himself with Russia and Hungary and the far right politics. So this is kind of sending a message. Earlier people were a bit doubtful, and I think the tipping point came somewhere around last week. I think this is the point where on 3rd of March, there must be some news article or something that came out that confirmed to many people that US is realigning itself away from Europe and away from the Western alliance. And US is becoming more insular, as a result of which all the soft power that US enjoyed, which was attracting money into US, has now worked in the reverse. And when US was attracting a lot of money, people in the US were very rich and there were billionaires and millionaires. There is that called wealth effect. So when there is a wealth effect, what happens is small losses are glossed over and people continue to remain optimistic and build new projects and so on and so forth. But as you see this money start to go out, what you're going to see is that the wealth effect also diminishes, and therefore optimism of the business as well as optimism of the consumer is going to reduce. So we should probably keep this at the back of our mind. Whatever I have said here is just my speculation, because I'm a foreigner looking at US. And I have investments in India, Canada, and in the United States. And one of the considerations that I always make is, what is the time when I would like to take money out of a foreign market into my domestic currency? I would always do that when the foreign currency is extremely strong. And I would take the money out because I'll get more of my domestic currency. And I'll also make that move when I feel that my domestic currency is going to get stronger. And that's the time when I might pull the trigger. So this is one aspect which is happening out here. And in this context, we also have to watch the USD Japanese yen, because there could be the yen unwind trade happening once again. So the overall situation is getting a little bit dicey. In this context, if you look at NASDAQ futures, I'm recording this at 9th of March 2025, which is a Sunday at 9 p.m. I can see that NASDAQ futures are down 0.90% in the trades that are happening right now. And we have this huge area of support out here, which is bounded on the top by 19,729.75 and at the bottom by 19,544.50 for NASDAQ. The question is, are we going to be able to use this as a support and stay above that? We can see MACD is bearish and momentum is also dropping. We are not yet gone into the 30% range on the RSI, but once we go there, we are likely to have a bounce, which is called as a dead cat bounce, which could take us to the next resistance level, and then we could test that and then come back down again, given the fact that US dollar is weakening and people are probably taking their money out. So that's what I'm thinking is happening out here. If you look at S&P 500, it's also dropped below the 200-day exponential, and we have a support out here at 5,738. And in pre-market trading, or right now on Sunday, a futures market is at 5,736. So we are just below the support that we have out here, which means that the market, when it opens on Monday, is most probably going to be weak. And I think we got to watch carefully what happens next and not be on the long side. And if we are going to take any position, probably shorts are what I think would be in order. But again, it depends on the stock. You have to be careful how you do this. Again, these are all my personal opinions, not financial advice. Well, friends, that's my theory about the dollar index. I wanted to get your feedback. Please let me know in the comment section, what do you think about my theory? Do you think I have got something out here? And do you think that the dollar index would probably touch 101.83 or maybe 102 in the next week or so? And do you think in the 10-year yield, you're going to see yields going up because the 10-year bond goes out of favor and doesn't command as much of a price, thereby pushing up the yields for all the wrong reasons? I would like to hear from you guys, and we'll take it up from there. Thanks and have a great day. Bye for now.